There's a good reason to be worried now, because Bitcoin is close to its all-time high, and whenever we had been at similar price levels, we tended to see a retracement. Now there is also another case to be made that this time is different, and here is what I mean. I want to discuss both the bear case but also the bull case in this video. What we see over here is the Bitcoin price, and have a look at our current price level. We have been retracing by 9% in July and by even 13% in August of this year. And the tops align pretty well. And it's even worse when we look at history. In the past, when we had quite a bit of a rally and we went close to the all-time high again, we tended to subsequently retrace. This was a drop of 31%. Or have a look at the tops over here. Again, we rallied, we hit the all-time high again, we hit it again and again and again. Very often we saw a sell-off after we hit very similar price levels after a rally. And we are just again at a potential major resistance, as we saw in the past as well. So that's the case made by the pessimists. Maybe it makes sense to already take some profit. In fact, the long-term holders are already selling for quite a while. This is the long-term holder spending. And we tend to see profit taking at a medium-term top. We tend to see buying at the medium-term bottom. So long-term holders tended to time the market somewhat well, and they are currently selling, which again would support the bear case. Or in other words, a similar retracement to what we saw in situations like this. Whenever we get close to the all-time high after a prior rally, we tend to sell off. And that's again the bear case. But here's the thing, there is an overarching trend that might be stronger than the medium-term potential sell pressure, and that's the capital inflows into the space. Because since October of 2023, we see continued capital inflows into the crypto market. The stablecoin market cap continues to go up. That's what we see over here. This was the Terra Luna collapse. So when the UST stablecoin went belly up, that led to a lot of outflows from the crypto ecosystem. And that led to crypto prices in general coming down. But then in October of 2023, we finally saw an expansion of the stablecoin market cap again. Now what this means is that people sent their hard-earned fiat currency from the traditional finance system over to crypto. So let's say you sent a deposit in form of fiat to Binance, then Binance takes that capital, sends it over to a custodian, to a stablecoin custodian, and then that custodian issues the stablecoins on the blockchain for holding the fiat money that you can then trade with. So whenever this thing is going up, we see more deposits into crypto than withdrawals. Whenever this is going down, people tend to send their money back into the fiat ecosystem, and the stablecoin issuers have to burn the tokens after they've sent back those fiat deposits to the investors. And so because this continues to go up, crypto prices tend to go up as well. Now the nice thing about crypto is that all of the data is transparent. So we can have a look at how much of the stablecoin capital is actually currently deployed. How much of it is risk off versus risk on. And we tend to oscillate in a somewhat stable range. So while this is the stablecoin market cap, here we've got the stablecoin dominance. How much percent of all of crypto is currently in stablecoins? And in the last 2 years, we tended to trade in a range between 9% and 5%. So when this is very high, then 9% of the entire cryptocurrency market cap is in stablecoins. This is when people are risk off. When people are risk on though, then only 5% of all of crypto is in stables. Now compare this with this chart here at the bottom. This is Bitcoin during the same time period. So when the stablecoin dominance is low, so that's over here, then crypto prices tend to be high. When the stablecoin dominance is high, then crypto prices tend to be low. And so it makes sense to sell whenever the stablecoin dominance is low. It makes sense to buy whenever the stablecoin dominance is high. So that's the general approach. Now there are two interesting things about this chart. The first one is we are not yet at the lower end of the stablecoin dominance. In other words, the market isn't as heated now compared to the prior heights in the Bitcoin price. Yes, we have topped at very similar price levels in the last weeks, but during the same time period, the stablecoin dominance did not go down. It rather went up because the stablecoin market cap increased. But the second useful thing here is that we can actually see what's the potential short-term upside for crypto. Because let's say we wanted to sell again when the stablecoin dominance is at a low of 5%. Let's work with the bull case. So if Bitcoin was not to sell off over here, but instead would further rise and create new all-time highs, how much higher could we potentially go until we see a turnaround? Is it 130k, 140k, 150, maybe beyond that? What's realistic? And so to answer that question, we just have a look at how much did Bitcoin appreciate in the past when it was at similar levels and then the stablecoin dominance went down. So let's just make that exact comparison. The current stablecoin dominance is at very similar levels to the 10th of November 2024. From that date onwards, how much did Bitcoin appreciate until we hit an elevated level in the stablecoin dominance? The answer is roughly 24%. So that's where it might make sense to take some profit if the bull case prevails, because then the market is already quite risk on. Then the stablecoin dominance is low. 24% from here. And so that brings us from the current price all the way up to $152,000 per Bitcoin. If the market was to go really risk on from here, and we'd see as much stablecoin deployment as we saw in Q4 of last year, and if October is really a thing and we tend to see positive performance in the last quarter of the year, then $152,000 per Bitcoin could be a medium-term top. Now I'm saying medium term here because this just equates to the stablecoin dominance coming down. It might afterwards oscillate again. It could go up, it could go down, but from medium-term cycle to medium-term cycle, the prices should still appreciate because the stablecoin market cap continues to go up, money continues to flow into the system. So this is really just a medium-term top in case the market continues to heat up. We would see a retracement, we would see another rally, again, based on the assumption that the market continues to expand. So yes, the current top could look scary because we have seen similar alignments in the past and we did see our retracements. But really, the current risk is maybe a drop of 11%. The potential reward is an increase of 24-25% all the way above 150k. And so really the decision whether to buy or sell here should just be individual, as in what's currently the allocation towards crypto. If your net worth is several years of your income and you've got 70 or 80% in crypto, it might make sense to sometimes sell because then a 10% drop does hurt. But if you are allocated towards crypto only with, say, 10 or 20% of your net worth, and you already made a lot of money with other asset classes, maybe you're considering to sell some of your gold position, then this might still be a good time to buy, even though we are close to the all-time high in Bitcoin. The stablecoin deployment is not at an all-time high, the market is not fully risk on, and the market continues to expand as there's money flowing in, as the stablecoin market cap continues to increase. I hope you got some value out of this video. I go into more depth in the premium membership that's down below, thebitcoinstrader.com. A link towards premium should also pop up on the screen over here right now. Feel free to also subscribe over here. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.